So ADA is showing some important signs of life right now. Not that it was dead or anything like that, but it's breached some very important levels, and there is one just ahead of us where ADA may in fact get more lively. And this is coming on actually some very good news that took place yesterday that may actually provide a little bit of direction over the next few months. And I want to talk about this with you guys. I'm Luckside. Welcome to the channel. If you guys are new or haven't already, make sure you hit that subscribe button down below. Hit that bell again. It's free to do. It'll keep you updated anytime there's new content live here on the channel. So first of all, we have to talk about this 20 and this 50-day moving average. These are important points of resistance when it comes to ADA. Many times, this has been a strong rejection point for the ADA chart. You guys can see it push down, push down, push down, push down. And yesterday, actually over the last 2 days, we were able to breach these levels. That's very important. That's incredibly exciting. And now we're on this quest towards this 100-day moving average, which is an even harder point of resistance. Now, I will say, ADA has shown strength around these levels in times past. You guys remember, we actually breached this back in the latter part of September before making a very volatile move towards our 200-day. These are our next two targets right here. We're basically sitting just below one at about 36.60, and our next one all the way up at about 40 cents. So this is something that may take place in just days. The reason why I'm saying that is right now BTC is going through a little bit of chop, a little bit of consolidation. Actually, it's a little bit of a bull pennant here. So we'll see if obviously we can get this to play out. That's not a very long bull pennant. But why I'm saying this is the case is we actually got some very good news yesterday. And that is that the GDP report wasn't really showing some signs of slowing down. We had a 2.8% increase over the last quarter. And this is important because there were questions. We definitely had questions with some of the fears of recession, right? People talked about the jobs report. People talked about, inflation being a little sticky. And there was this question of, are people playing things a little tighter to the vest? Are they going to be spending less money? Does this mean that we're going to even have possibly a negative quarter of GDP? And we didn't. Now, I know data can be manipulated and things like that, but I will say, at least from my industry, there's been periods where it's been slower, but people have been spending. They've been spending and spending and spending. And now it's all a question of sustainability when it comes to spending, which I'll get to in just a moment. But now there's talks of us actually achieving this soft landing. And I'm not ready to call it that yet, right? But we are seeing the right signs. We're seeing resilience in the economy, so capital that people have, and we are seeing inflation, in fact, start to at least slow down. It's not running wild like it was over these last few years. So these are very good signs. And that brings me to this. Now, personal savings. This is the question, right? People always say, oh yeah, what happened back in 2020 and 2021 isn't going to happen this time because people had so much money. And frankly, they did, right? We saw a huge bump in pay. The cost of goods and services was still low. So people had all this extra disposable income that, yeah, they may have thrown into the crypto market. We obviously see what 2020 looked like. You guys can see the high percentages of disposable income was available for people to spend. That's why inflation got out of control in the first place. It's because there was so much money flowing around. Now, obviously that has dropped. We've gotten to a point where the cost of goods and services are a lot higher. And it's been a question of, do people have that income on the side to flow into the crypto market like we've seen in the past? Okay. Now, I will say there was a bump right to begin the year, and then it slowly trickled down like you would normally see here. And now we're at this point of basically where 4.8% of disposable income is going into savings. And what I have to say is this is the thing that people tend to forget, right? So yes, that's not as high as it was back in 2020 and 2021, but the percentage of people that are getting into crypto during this market cycle, it outweighs that percentage differential by quite a bit. We're supposed to, again, run from somewhere in that 5 to 6% of the world in crypto to over 10%. We're getting into the early stages of mass adoption. This is something that's not slowing down. Some people think that, with some of these concerns or, concerns of the presidency or war or things like that, it's going to slow down the fastest growing, we'll call it item, right, in history. And it's not. That's not how it works, right? The more and more you see it, the more and more it's pushed, the more and more it gets adopted. So that's why I say that these big times that we have, both in the near term and the longer term, are very exciting. This is not the time to be sleeping on crypto or to get, dissuaded by price action or things like that. Frankly, ADA is gearing up for the big pop. It's gearing up for this big breakout. And all the signs are looking just right. Again, I've said if BTC can get to, about 5 to 10% above the prior all-time high, that's going to be a very strong sign for the crypto market. That's probably going to be where, again, a lot of that outside capital begins to flow in and assets like ADA start to do extremely well. So I just wanted to share that with you guys. I'd love to hear your thoughts below. Does this matter? Do you think that this GDP report is accurate? And are we about to start seeing some big booms in the market as we get into next week, which is an important one? But have a great day. Show your love below. I'll catch you guys in the next one. Take care.